One of the greatest businesses to be in, according to Warren Buffett, is insurance. However, American insurances are fairly expensive, so maybe it's time to look to Europe with Allianz. They're trading at a 12 forward PE, 4.3 dividend, okay share buyback program around 2% per year, and continuously growing their premium revenue. Now then is the question, how do they make money? Well, you think they are mainly in Europe? Yes. 24% of our revenue alone is Germany. They're a German company. 26% from the rest of Europe, some US, growing markets, this is mainly India, and they differentiate their business into 3 different segments: property casualty insurance, life health insurance, and asset management. Allianz has some funds which they manage. It's a small part of their business, but it is a great part of their operating profit because these funds are very profitable. This is a very competitive business where they're constantly getting attacked, so these margins are questionable. However, when we look property casualty insurance, this includes everything from your car insurance to your house. Life and health insurance, very simple. This is everything that is included in the other segments, basically. And when we look at the recent growth, we can see property and casualty has grown a lot. Why? Very simple. A lot of people are pulling out of the property insurance market, in Germany especially. And if you renew your property insurance, it gets very, very expensive. So this explains the massive rise in operating profitability. But however, their size is very beneficial because they are able to stay in this property and car insurance business while other people are pulling out, because while the risks are increased there, they can shoulder that risk. Smaller insurance companies, especially here in Europe, we have a lot of small insurance companies. They could not take that on, so they're slowly leaving the market, which means Allianz can take on the risk there, and they're well getting compensated for it. And this trend continues in the Q2. If you only take the Q2, they have massively raised the rates there. 8.5% in Germany, 13% in France, and this is pricing power that they can exert right now. Issue is, there's a limit, because currently they're abusing that hole in the market, but however, they cannot raise rates too high because 1, it will become a political issue, and 2, at that point, smaller insurances would be able to shoulder that risk again. But for now, that is a great boom in profitability, and at the same time, they made the operation way leaner, so that led to a giant boom in profitability lately. The company hasn't grown much before, especially because they were hit very hard during 2022. 1, they had investments in Russia, which they had to basically write off. 2, interest rates. What do all of these insurance companies have in common? Especially with life insurance, stuff like that. They have government bonds. And as I said before, if you have a premium money coming in, you don't know when it's gonna get paid out, but you know how much you're gonna pay out on average. And in the meantime, you invest that money in stocks or bonds. And they really like bonds because it's just a way safer investment. Then when interest rates rose, all their bonds which they had suddenly crashed in value. So they realized a giant hit there. The asset management business, it is under attack. It's not growing as fast anymore. It's mainly the old people who use Allianz funds. Their life and health business has not really performed as well. This segment includes stuff like extra health insurance, like dental, etc., life insurance, and other stuff. Now, this segment has had a hit lately, because excess mortality has risen, so the expenses have gone up there. But there's one issue that I also see with the company. So much of their operating profit is made in Germany. Now, this is only the property and casualty insurance, but still, this is mirrored across the entire company. A lot of our profit is made in Germany. Why? We Germans, we love to insure ourselves against everything. We do not invest, we insure. We have life insurance, we have private retirement insurance, we have private unemployment insurance in case we get injured so we can't work again. And now, of course, that led to a high profitability in the German market, because per customer you have way more insurance than in, for example, the UK and the US. However, there's a limit to it. Plus, the newer generation doesn't like to insure itself as much as the older ones. They're more likely to invest instead of putting it into an Allianz fund or Allianz, I don't know, life insurance. There's the question. We had a business, net income was growing fairly steadily, around 4 to 5% per year. They had a really hard 2020 to 2022. Russia invasion, inflation, interest rates, they hit them specifically hard. However, they got over this because recently the market has developed to their favor. However, it can't continue like this. Like I said, if they raise rates even more, it would probably become a political issue, and it would once again allow competition in. So then is the question, what can we expect from this company? They're going to continue to buy back 2% of shares. They've recently bought back less just because they were increasing reserves, plus the around 4.3% dividend yield. So let's throw that into our calculation and see what we get from that. They're currently making 26 euros per share. Now, what are our growth assumptions for Allianz? They're currently making 26 euros in earnings per share. I think for the next 5 years, on average, like I said, they're going to grow revenue around 3 to 4%. But because for the next few years they will still have higher pricing power that they can exert, I think on average, with share buybacks included, they're gonna grow 7% over the next 5 years. What about afterwards? Afterwards, I think it's gonna go back to normal. 3% revenue growth, 2% share buybacks, 15 multiple seems like a fair multiple for a slow growing but very great business. 60% payout ratio with a little deduction due to taxes would lead us to 374 per share, which would give us a 7% discount to the current value, which means we get a 10% return on Allianz with very conservative assumptions. So I think this is not bad at all. What if it goes better? What if they can keep up their pricing power for the next few years? And a slightly higher multiple. However, that is gonna be hard. It's an insurance stock, especially in Germany. Stocks don't get rated that high unless they have very high growth. Then we get a very great return at 464. This is just our worst case scenario. What happens if they only grow at 3%? Plus get re-rated to 10. They're currently at 13. It's not that far down, honestly. Then we only get to 30. However, is this likely? I don't think so, that they're gonna only have 1% revenue growth. So I think this is very realistic, maybe even a bit conservative. So if you're just looking for a boring insurance stock which is not highly valued, I think Allianz has a very great moat, some great growth opportunities, and I think it's just way more fairly valued than the US insurances. However, am I gonna add it to my portfolio? Probably not. I don't like the risk-reward ratio here. Maybe we have a few bad quarters and the stock plunges by like 20 to 30%, then it might become interesting. What do you think? Write down below. Have a good day.